Hey traders, welcome to our weekly Raghee report. Great to see everyone. Got a slightly updated rig here in the office, so hoping everything on your end is good to go. All right. Happy Sunday, everybody. Hope everyone is doing well. All right. Got the affirmation from the bot. Everything is looking good. All right, let's get to it. I'm going to take a look at what is going on as we get an early look at the open and what it is that we're going to be dealing with. And then additionally, and I realize my camera is going to be slightly in the way here. We'll sort this out. The way that we want to process this week is all about, well, let's take a look at this chart right here, right in the center. Now, by the way, I'm using TradingView here. These are TradingView charts. And this is a TradingView chart fed by TradeStation. So remember, if you are going to pull futures data on your TradingView, crypto is no problem, Forex is no problem, stocks and ETFs, no problem. But if you're going to pull futures, you need some kind of feed from your broker or pay the CME, and that will get you going. Okay, so right now I can tell the only issue I'm going to have is typing in my symbols over here, but we'll sort it out. Okay, so happy Sunday, everybody. Great to see everyone. What we're talking about here today is not necessarily the June low, which we are just shy of. This is a continuous contract of the S&P. So we are just shy of the June low. Is this a downtrend? One of the things that we were talking about on Friday in the futures room and in the Sector Secrets Mastery is this is absolutely now a double red downtrend. I need a second pair of red dots to stay. So by the time we finish the current candle, which will take us into tomorrow, which will take us into Monday, this red over red read right there, you can see there, that's got to stay into tomorrow's close. If that happens, that's now then a downtrend. So this is something we will keep a very, very close eye on. And this could be said for all the different indices. Let's jump on over to the NQ. See there, same thing, fresh double red. We haven't seen a downtrend, by the way, gang, since you can see here, June to early July. This hasn't been a downtrend up till this point, but clearly it's been very bearish chop. I don't want anyone thinking that the last time we were here and bounced is anything like what we're dealing right now. In fact, since most of you, I imagine, are on the Simpler Trading YouTube channel, you can check out a video that I posted on Friday that walked through what the difference is in terms of the different readings that I saw in July versus the readings now. Did I think that July was going to be a bounce that, well, would not be broken? I actually did. I did not presume July would be broken. I still am not looking for significant lower lows, but I am expecting the July lows, June actually, I am expecting the June lows to be tested for sure. And especially if we're going to stay in this double red downtrend, I've got to expect a little bit more selling pressure. Doesn't mean that we're down 10% or whatever the expectations are from here. It doesn't mean that we're looking for a lot more lower lows. I'm just going to trade what we have, gang. And this is definitely something I want to do more of. I was actually doing a write-up. I don't think I have it here. And I was using a single sheet of paper, and it was graph paper. So each little dot was 1 week. So 1 week took up the entire length of the paper. At some point, I'll grab that, and I don't know where it is. And each dot was a week. And if you look at a typical swing trade, it was just three segments, three little graph boxes. Again, remember, 52 was the entire length of the page. So 3 weeks. And then if you looked at a day trade, it was 1/7 of one of those little boxes. And what I'm trying to remind myself and everyone here is know your time horizon. Time horizon will most definitely dictate time frame. but know your time horizon. Because if your time horizon's a few hours, the really 2 to 2.5 hours, like my typical day trading window is, whether we're up, down, new lows, new highs, it really doesn't matter. If we're looking at swing trades, a few days to a few weeks, right? My typical days to expiration on an option trade is about 45 to 60 days, no less than 30 preferably. So that's the time horizon maximum for that trade. And then if you think about my position trades in my portfolio, that's going to be a minimum of 6 months. It was literally half the sheet of paper, up to 1 and really 3 to 5 years. If we're looking at this market from the 3 to 5 year perspective, gang, day-to-day weakness or strength is not something that we really should be losing sleep over. I would highly recommend, and I do this for myself, gang. What I do is when I get my statements for my longer term investments, I put them all in a drawer. I don't look at them any more than about once a month, if not once a quarter. And frankly, the less often I look at them, the better off I am. Trading is very different than investing. The opportunities right now are at the extreme. Day trading and longer term positions where this weakness could land us somewhere that when the market does, and it will, of course, at some point, eventually turn back upward, we've positioned ourselves at really great prices. And so that's the way that I'm managing this, always looking at the opportunity, always staying optimistic, right? I will tell you this, I've been lucky enough to be mentored by a number of very successful traders, floor traders, traders that, worked at debt. I mean, all sorts of traders. None of the ones that were very good at what they did. And luckily, the ones that I got to bump into and kept in touch with did well. None of them that did well, and I'm talking they made money, right? Let's just be as blunt as possible. They were profitable in the markets. They were all very optimistic. None of them were grumpy old curmudgeons always talking about the end of the world. They just weren't. And I just haven't met, if you think about if Grandpa Buffett was to join us on the show right now, think he'd be in a grumpy mood? And don't say because he's a billionaire. If you look at throughout his career, he was always very optimistic. He was looking for the next opportunity. And that's what I wanted to just definitely spend a few moments to talk about as we kick off today's show. All right. But let's jump into your questions. Let's do that. As always, thank you for being here for our Sunday show. I really want to hammer home keeping the proper perspective, keeping a perspective that I can tell you has served me for 30 plus years through wars, through bubbles inflating, through bubbles bursting, through hedge funds imploding, through recessions, you name it. I know a lot of you have managed your money through these times as well. And if you think back, what served you? Being optimistic, looking for opportunity, or being a pessimist and saying, well, the sky is falling, right? The Chicken Little story. I don't think Chicken Little would have made a great trader. All right, heads up on NTNX, and Wolf says top spin. And I can see here that this, let me try this. I've got this light in my eye. Does that make a difference? Oh yeah, that is kind of nice when the light's on, wasn't it? I just can't see the input for the symbol. All right, NTNX. Very nice. Wolf. Very nice. Double greens. Now, top spin, I don't even know what wolf spin is. I'm not going to dive into it now, but whatever corner of the market that you've identified, hey, this is defying gravity. This doesn't care about what's happening in the S&P. We can keep looking at buy the dip opportunities. Look in that group and see, well, what other friends do they have that are also heading higher, maybe with better options liquidity, maybe with better structure, etc. Maybe with fewer gaps. So I will say Wolf I like a little bit less than NT. Oh no, they both have some big gaps there. So be careful with the gap, but absolutely looking very bullish. Hey there, Nick. I hope you're having a nice weekend. I sure am. I absolutely am. Thank you for asking. What are my thoughts on using a stop based on average true range? How many ATRs would I use? I do not use ATR, Nick. I don't have a problem with it. Many people do like an ATR based stop, average true range. I use a PMR based stop, price movement range, I might use a price movement range of 2 or 3. So it's no different than if you were saying, well, I'm using a 3 ATR. I'll just say I'm using a 3 PMR. You might say, okay, Rog, what's the difference? As many of you know, price movement range is historical volatility, a look back of 6 months. And ATR is, well, whatever your ATR setting is, 7, 14, 21 periods. So I use a longer, much longer price movement range look back. So that's where I say that the approach is pretty similar, but the calculations are rather different. And again, lots of people use them. I just prefer the PMR to the ATR. Okay, and PMR is something that I calculate in terms of, again, that 6-month look back on every symbol. All right, next up is V-score, HPMR. Is it the same tool? No, not at all. So Z-score isn't a tool, Topspin. It's actually the standard deviation curve, right? V-score is my tool where I've taken the standard deviation of the VWAP, volume weighted average price, and HPMRs are hourly price movement range. And HPMRs are these things. They use volatility and time to identify where support and resistance could be from hour to hour. V-score can be intraday or end of day. HPMR is strictly an intraday tool. Is there an SPX setup for a day trade? SPX, I will only look at if I have something setting up on the S&P. So if the S&P sets up, then we can look at, well, if it's during the regular trading day, 9:30 to 4, I can look at SPY. I can look at the SPY options, of course, ES, MES, which is the micro, and then SPX would just be another version of S&P. The difference is the volatility, the leverage, etc. So SPX is not going to do anything from a price movement standpoint that directionally is going to be any different than what we see on the ES or the SPY for that matter. But the SPX is a European style option. And the reason we have that crazy volatility is they must be exercised the day of expiration. And that's what creates a lot of that volatility that so many folks like to trade. So it's not necessarily that the SPX does anything inherently different than the ES or the MES or the SPY, but those options are a completely different animal. So if ES has a setup, then SPX or MES would too. Now, do I have a setup on the ES? Not so early in the day, John. Not yet. The markets have been open for 13 minutes, so not quite yet. Nothing that I can really see that I want to do at the moment. And this is the ES. No, this is the SPX. So here's my ES. And remember, when the SPX is something that we can look at, right? ES, MES are tradable now. The options on the futures are tradable now. Tomorrow morning, we'll know better about the SPY and the SPX. And do I have it set up on the SPY? I really don't, unless we want to fade the HPMR zone. That's about it at the moment. Okay. All right. Next up, Mr. Walker says, listening from the driving range. I love it. I love it. All right. XLY and General Motors. Okay. So XLY, end of day, discretionary, consumer discretionary. I don't have it set up here unless the minor low perhaps completes. That means we take out the high of Friday, which was 148.12. So tomorrow we'd have to trade up, say, through 148.15 on that one, Mr. Walker. That would be a fairly aggressive approach. And that would be taking advantage of a minor low, and I don't have a problem with that, but I'd love to see a stochastics or a V-score cooperate with that. And then General Motors, I'd say would be about the same thing, but I prefer the XLY, Mr. Walker. I prefer the XLY a little bit more to that. And we would need, again, that minor low to complete, which means we need some bullish momentum through Friday's high. All right. Hey there, Zane. Do I have any preferred ways to risk control trade the UVXY in these volatile times? Is there a better instrument for volatility than the UVXY? So if you're looking at UVXY, my preference, Zane, is to look at the VIX, right? So you can look at VXX, you can look at VX futures, okay? You can look at, let's see here. I'm trying to remember how I pull this up on TradingView. I don't trade the UVXY, but VX I do like. And VXX, I don't have a problem with either. So UVXY would be VIX, yeah, or VX or VXX. That's a lot of X's and V's. My preferred way is the futures contract. I get some leverage. I get better, what I would consider more complete trading hours across the globe, Zane. And then I've got options. I've got options on that. So when you talk about risk controlled, my favorite way to control risk, Zane, would be focusing on the position size, focusing on the entry zone and its proximity to the point of validity for the trade. And then, of course, waiting for a setup. Here, in terms of the VX, I mean, clearly it's heading higher as we've seen the movement lower in the equity markets. The major issue, if you're going to trade VX futures, is watch the roll. That's going to be significant because there's rollover gaps, and you'll see those quite consistently accompanying each contract roll. But in terms of risk control, I'll say, Zane, I control risk in every market in a similar way. What's the risk to my account? And therefore, what's the allowable risk per trade and per trigger? So really, the threshold that I'm not allowed to consistently or really want to consistently break is no more than 5% risk to my account. It could be far less. It could be 2.5%. It could be 3%. But I don't want to consistently be risking greater than 5%. So risk control for me is position size mostly. I hope that makes sense. Hey there, Yee. How are you? Good to see you as well. Can I please explain the relationship of the S&P, the euro, and the bond market? So, Yee, I on Friday I talked about that triangular, that little trifecta, if you will, of not their relationship to each other. Thank you for the question. They don't have a relationship to each other. I do not believe that equities and the dollar have a direct relationship. I do not believe that equities and the euro or bonds and even the equity markets have a direct relationship. I know that's probably not what most of you have heard. The way that I like to look at it is there is a middleman in there. The middleman is literally a man. Sometimes it's Jerome Powell. Sometimes it's data. Sometimes it's macroeconomic sentiment shifting. So they will move based on similar catalysts, right? We know that bonds will move based on a certain catalyst, and the yields moving higher based on an expectation of the Federal Reserve hiking rates. Well, the rate hike, oh, what did I just do there? There we go. The rate hike setup is what? Dollar will strengthen. That means euro will weaken. Bond yields will go higher, which means the actual bond futures go lower, TLT goes lower, and equities usually move lower as well. So that's the connective thread. All right, gang, that's the connective thread. I hope that makes sense. Yee, wonderful question. I don't want to imply that they affect one another. The glue is the monetary policy right now. Hope that clears things up a little bit. So wonderful question. Hey there, it's me, Claire. I'm just curious, a best day of the week to buy an option trade? I don't know. I would say I don't like to do it on Friday, but I don't believe there's a best day of the week. I think I'm looking for a setup. I don't even know if there's a best time, quite frankly. Someone might have figured that out, but I don't believe I ever want to be thinking Tuesdays are the best days for trades. The best day for trades are when my entry price is reached, I can control risk, and I don't have, say, a hot zone, right? Breathing down my neck, creating a certain amount of uncertainty and volatility. So I really don't know what that would be, because I've never processed the market in that way. I hope that makes sense. Okay, cool. INVH. Hey there, Mark. Double yellow, slow stow. We get that minor low in there that happened on Friday. The closer we can get to 33.35 to basically 33.20, I think you're in good shape. And that 34.35 was in play on Thursday. So if you got the other tools lining up in that way, Mark, I like it. I don't know what, let's see, what is this? Be careful with, now this is going to be lower weighting, right? This will be lower weighting in terms of the home builders, ITB, XHB, etc. Be careful. However, yeah, I like the setup. Where are we in terms of proximity to earnings? October 26th. So you're still outside that 2-week window too. I like it, Mark. I like it. Looks good. And remember, if we break the low from Thursday, heads up, that could be a really tight stop you could place. But remember, we could look for another minor low potentially down here at the bottom. And you can see the last time we took off from this area right there, minor low. There's another minor low. Actually, there's another minor low. There's another minor low. So if you find those minor lows, you might actually find some really good setups here. All right, PP family, Raghee, any advice on support and resistance for the S&P and NASDAQ for this week? For the week, well, I'm going to go to the NQ. Here's the NASDAQ. And in terms of the week, just looking at my other screens here. It's hard for me to say I want to buy the bounce of this Darvis here, because that would be the most obvious support, because we're flirting with that double red. And my rule, whether that be intraday or end of day, is if I have a double red structure, a downtrend, I better have a really good or really low risk setup to get me long, because really a buy in a downtrend is not valid. A buy in a neutral market, valid. A buy in an uptrend, of course, is valid. But a buy in a downtrend, even one as fresh as this, could be problematic. And that's going to apply to the S&P and the NASDAQ. Let's see if the minor low kicks in. We have an inside candle right now. Let's see if we can transition out of the red that we have right now on the trend, because that would mean that we go back to neutral, and then we can talk about the validity of support. As far as resistance, it's pretty far overhead. I would say the initial resistance that we're going to run into is Friday's high. Then we have a nice volume ledge around 11,950 on the NASDAQ. All right. Let's see. Next up is, hey there, Yee. I have the VWAP Max. I want to rename that thing. I asked Trish, I said, when we have another launch of volume, right? When we start talking about volume again, which is going to happen this fall, I really want to rename that thing, because it's not just volume weighted average price. It's how we decode volume, period. But yes, I will be teaching volume on November 5. I know the date and everything. We're going to have our webinars at the end of October, basically roughly a month from now. I'm going to be introducing what I do with the V-score. If we're going to have any upgrades to it, which at the moment I don't think we are. We have the V-score signals, which has been amazingly accurate for understanding standard deviation and volume. On Friday, I went through not just using it in just regular old vanilla markets, but what happened in 01, 02, what happened in 07, 08, 09, even 19, 20, 2019, 2020, trying to grab extreme examples of massive volatility and why volume still helped us understand it. And yeah, we're going to be diving back into that for a class on November 5, both intraday and end of day. So I'm really stoked about that. Yeah, I love volume. I think price tells a really important story, but in fairness to price, it tells an incomplete one. If Price went to 100 and there were 5 shares. I'm using extreme example. We had 5 shares at 100 versus 500,000 shares traded at 105. Which level do you think is more important? Right? There might be a touch point left behind. There might have been resistance, maybe a trend line, whatever it is. But size, it does matter when it comes to understanding the importance of certain price levels. So very excited. November 5, yes, is the class date. All right, let's see. Sandeep, how are you? Where is all the money flowing into at this time? All the sectors are red, and the treasuries and crypto are red too. Is it a smart idea to slowly scale into TQQQ if you believe long term? I know that a lot of traders want to get short for a prolonged period of weakness. My experience has been, and when we start getting more and more into volume in this bearish environment, I'm sure it'll come up in Charts and Coffee. I want to have some really great examples for you all. If I'm going to start being bearish about the equity markets, and we all, if we want to, there's really 2 things to remember. One, there's no harm in day trading. There's no harm in having a very short-term time frame approach. I do not have a longer-term time frame approach to downtrends because, and I'll show you why. When we look over the course of years, this is a weekly chart of the QQQ I'll pull up, for example. We are going to have moments like this. This is a pretty significant pullback in 2022. However, look at the overall movement of the last. I mean, look at the overall movement. This is even through the financial crisis. This is a significant move, but let's also remember, let's look at it through the lens of the NASDAQ. The volatility that we're going to experience is, let's say we have 5% volatility at 4,000 versus 5% volatility at 16,000. So it makes sense. 5% of 4,000 is far less. 5%, still the same percentage, of 16,000 is far more. If a correction is what's the random definition of a correction? Is it 10%? I don't even remember what it is. If 10% of 4,000 is clearly a lot less than 10% of 16,000. My point is, as the overall averages move higher, and clearly it's almost 20 years right here we're looking at. As they move higher, which is the general direction, the volatility that we're going to experience as a percentage of that value is going to be greater and greater. That being said, I don't ever have longer term bearish strategies because usually, most especially in the last, I would say easy 15 years, downtrends are not that long lasting. They're just not. They haven't been. So I'm going to play the probability, not the possibility that this time is different. None of my trades are ever built on this time is different. Does that make sense? So the general direction of the markets have been and will likely always be up. Are we going to have pullbacks like this? Yes. And one day when we're at NASDAQ 20,000, the 5% volatility will be even greater than it is now. The 10% volatility will be even greater than it is now. So I don't believe in a long-term short. So I'm probably the last person to ask about that, Sandeep. I think a lot of folks have a far more bearish outlook than I do. And I would ask them what their approach is. And when we do talk to anyone who's bearish, right? And I say this not because I am and not because I'm going to set these up. I'm going to day trade through this volatility, and I'm going to look at weekly time frames for longer term opportunities to build my portfolio. But if someone wants to give you a swing trade, make sure it's more than a target. Make sure there is an entry, that there is a stop and a target, right? And I've been talking about this a lot because it's easy to say the markets are heading lower. It's easy to throw some sort of very low target out there. But remember, traders who might have done that in, say, April, May, June, did they account for what was essentially a 700-point rally, right? So it matters from where we enter the trade. Trading is timing. Trading is price levels from which we enter. So if you are going to do that, Sandeep, and I'm not going to be the one because I'm just not doing it. But if you are, make sure you have a price level from which you can control risk and you know the validity for this bearishness that you're watching. If not, I will tell you, one of the things we've been doing in the Sector Secrets Mastery is short-term timeframes. We've been day trading 5 days a week, with the exception of non-farm payroll, options expiration Fridays, and end of quarter. Other than that, we've been day trading every single morning, just the morning. And if we have an opportunity, we take it. And if we don't, we don't. And I'm able to keep a really small, short window to be long, to be short, anything we want, as I'm waiting for my weekly timeframes to reach levels that I want to begin putting stock into my portfolio. Does it mean that I think the bottom is in? No, but I do believe, and I still do, the bottoming process likely has begun. And if we end up back in a downtrend, I'll have to start to look at another bottoming process. I'm not here to fortune tell, gang. I'm here to look at what I see. Last time I said there was a bottoming process, that was on July 7th. That was when I said, hey, let's get long. That's exactly what happened. I'm going to have to basically look for another setup, right? I don't know. I really did believe that could be the low. I really did, until Jackson Hole, until CPI really changed that macroeconomic narrative. Now I'll just do the same thing that I was doing back in end of June, early July. Do we have another setup? And if we have another setup, we'll go for it. I mean, that's really all I can do, but I don't have a longer term bearish outlook, and I will not put I won't do anything other than trade to the short side with a few days to a few week time horizon. So I hope that makes sense. I hope that makes sense. All right, gang. A few of you asked, where did the wave go? I'm actually looking at some anchored VWAPs on this chart. So when I'm anchoring VWAPs, I'll just uncheck the wave. It's easy to toggle that on and off. So I can look at my grab candles, which of course color code based on the wave, and I can look at some anchored VWAPs as well as my V score. And then I turn the wave back on. I have two layouts. Here's the other one. So don't worry. Don't worry. The wave isn't going anywhere. All right, gang. Have a great one. So where is the money going? If it's not going now, cash is a position. Currencies, look, currencies. You could see currencies, dollar. You could see money going to any number of places in terms of on the sidelines. I don't know, frankly. I mean, I know that I'm usually to some degree pretty, I won't say fully invested, but I've usually got 70+% of capital deployed nearly all the time. However, I will say that where is it going right now? I really don't know. I really don't know. Air conditioned gypsy. I don't know. I think that ultimately for me personally, my plan has been always have some skin in the game. Try to find a corner of the market that I could trade, day trade, or put money to work on the weekly time frames, preferably with that longer term time horizon. But yes, money can come off the sidelines for sure. But remember, I also, when you look at what the hedge funds and pensions have to do, they can't have a lot of cash on the sidelines, gang. They have rules, regs, charters, whatever you want to call that, where they have to have a certain amount of their capital put to work. So where is it going? I would imagine to a certain degree, don't be surprised if staples, utilities, things like that are I would look at some fund flows. I mean, I don't know the answer clearly, but I'm trying to point out places to think and look at some fund flows and see that even with the falling price, if there's any fund flows going into certain sectors, you can do that at ETFDB. That might actually be a really fun thing to do on our Tuesday session. That actually might be a really fun thing to do, and take a look at flows on Tuesday. Someone nudged me. Someone from the Sector Secrets room nudged me. That might be a cool conversation. All right. Okay, gang. I hope the new lighting is a little bit better, and I'm always trying to improve the audio and the video here for our shows. Thank you as always for being here. I'll see you tomorrow for Charts and Coffee, 9 a.m. And in the meanwhile, enjoy the rest of your weekend. Thank you for being here. I'll talk with you tomorrow. Be good to each other, gang.